Welcome back. Talking about the market reaction to Japan today. Bob Iacchino, Boris Schlossberg. Good morning to you guys.
Hey, morning.
Boris, a lot of discussion about currencies over the weekend and repatriation and of yen. Is the bias for the yen still to the upside, and can the BOJ keep up?
You know, one of the cruelest ironies of this whole thing is that the worst thing that Japan needs right now is a stronger yen, and ironically enough, that is what they're getting because of the speculation of the repatriation flows. Today, you know, it went all the way down to yearly lows at 80.60 before it finally bounced back up because of the liquidity procedures. But the bias continues to be every time there's a spike, the speculators should continue to try to sell it, try to see if they can push it to the 80 level. I do think if they push it below there, the Japanese officials are going to come in and do some intervention because they simply can't afford to have it this low or this high, dollar yen be this low for a sustained period of time because it's really going to hurt their recovery efforts.
Do you think the Japanese, do they have to sell their U.S. treasuries to finance the reconstruction?
Tough question. You know, they may have to do that. They may, you know, maybe the BOJ will simply try to monetize a lot more of the debt internally. I was thinking that if they do sell the U.S. treasuries, that's only going to hurt yen appreciation or hurt them by giving greater yen appreciation. So they may want to try to avoid that as much as possible.
Bob, I wonder what the market reaction Friday and today tells you, and how much of the equation is oil to you today?
Well, it's not as much as it was, to be honest. You know, it kind of is interesting how the Middle East has taken a back seat to the natural disaster and then the potential man-made disaster with the nuclear reactors. And you saw the reaction on Friday being very typical of a fickle buyer's market. But I want to throw in that it is still a buyer's market in the equities, in my opinion. Traders down here have been looking for dips. They've been looking for a relaxation of this straight-up run that we've had since November of last year. And, you know, unfortunately, it's a natural disaster and a human tragedy that makes that happen. But when you're watching those things on TV, and even though the fundamentals for the market to go higher are set and they're still in place, and the economic indicators in the U.S. specifically point toward an upward moving S&P, this is exactly the kind of thing, the kind of uncertainty where it's difficult to buy when you're watching that happen on your monitors. I think traders say will start off very, very slow. And as news about the nuclear reactor if it settles in, you'll see buyers come in. If we get a close above 1306 on the June S&P, I think that's a good sign with another $20 or so to go over the rest of the week.
Yeah, we got the Buffett buy, which might get lost in the mess of it all, but still worth watching. Apologize.
There's definitely still buyers of dips in there. There's definitely still buyers of dips coming in.
Apologize for the short segment, guys, but we'll see you next time. Bob Iacchino, Boris Schlossberg.
Thank you.